Okay guys, so following on from the last technical analysis video that we did here on Cardano's 𝗕𝗘𝗪𝗔𝗥𝗘, which actually played out really nicely. We were talking about the potential for locking in some profits around this area here after entering in a long position at this low side. So we're talking about the end of last week going long on Cardano's 𝗕𝗘𝗪𝗔𝗥𝗘. We were looking for the targeted range that you see up here, this yellow box. We saw this initial kind of resistance. We came back down, we surged back up for a double top. So we were looking at locking in profits. There was minimum upside potential and a lot more downside potential. We were hoping to hold a 200 EMA, we couldn't, and we actually came back down to entry. From here, we found a double bottom, just like you had the double top, and we obviously come up and hit target. So fantastic kind of trade setup, essentially. We actually had double dip kind of situation, I guess, right? We enter, we could potentially lock in those profits specifically at the double top, and then we could enter back in and ride it back up. So fantastic moves to the upside have been seen here. The surge to the upside from this most recent low on Sunday up to the high that we had here Monday at 1400 hours UTC. It was a 6.76% move, and then we've pulled back just a bit here, coming in at around 5.44 at this point of recording. Now, taking a look at our structures here, very interesting moment. Resistance is on the 200 EMA, 200 EMA, 50 EMA, 50 SMA, the white, yellow, and blue lines that you see coming through the charts here. So is this kind of now over? And do we have to kind of now be a little bit more concerned about moves to the downside? Well, we have got a very sharp decline here. This move to the downside is very interesting, and it could actually be a precursor to more downside action. But that's not necessarily before we come back up to the resistances around 63.28 to 63.49. But let's go ahead and take a look at the momentum. Momentum is still pushing up higher. So yeah, I would say that we're probably going to find this resistance here at the kind of 63.28 to 63.49, at least at the point of recording this video. That can change over the next few hours or so. So should keep a close eye on this. And as we think about the relative strength index, we're coming up to the 50 level. Again, this is still bearish territory. If we get a clean breakout, we might be able to see another surge to the upside like we had seen previously. But for now, there's nothing there to kind of get our hopes terribly too high. The MACD histogram here, interestingly enough, does show, you know, some interesting kind of points, but we do see bearish divergence. So let me draw that in so you guys can see we have higher lows on our price action just in here. Okay, and whilst we have higher lows, we actually have lower lows on the histogram. Okay, so what we're seeing here is basically that there is momentum that is building to the downside, but the price action hasn't yet come down into lower lows. So this is a precursor to what is more than likely going to happen. Again, no guarantees, but a higher probability that we actually do find a continued move to the downside here. So let's pull this all into context. We were looking for this area between 63.85 to 64.59. And if we go ahead and pull this into our kind of understanding, let's go ahead and just check where we currently sit. It has come up to its typical areas. So in fact, actually, I now need to adjust that, quite a bit, in fact, because of that low. So let's go ahead and adjust the waves to what's actually going on. It's this one right here. And you can see that we actually come into an exact one-to-one. So that is going to mark this as complete. I'm going to use A, B, and C for the corrective pattern. Right, so, okay, so it is done here. And the indication would be that we'd now be looking for a 3-wave move to the downside on the bear kind of minimum expectations. This could be a 5-wave drop. So let's go ahead and check it out on a 15-minute time frame. In here, you have a pretty interesting kind of structure. I could argue that this might be a flat correction, resistance here, potentially moving back down. It to me doesn't look like the strongest position for 𝗕𝗘𝗪𝗔𝗥𝗘 at all. So I think that we are likely to see more slippage. There is a strong area of support down at the lower ranges. I'm going to go ahead and draw those in just down here. Good support between 60 and 61 cents like usual. So I'm looking for a bit of a push higher. I'm looking at 63.28 to 63.49. From here, I'm then looking for a move to the downside. Let's run the scenario here and see how this one plays out. I think it's got a flat correction going on, I'm going to run it from this premise. It actually indicates a deeper move, more towards this kind of lower range down here than this higher one. Minimum expectations, though, are going to be set at dropping down lower than 61.59. That's going to be my minimum expectation, but there's a potential move here between 59 and 60 on the typical kind of structural points. I'll draw that in with the yellow box. And then, of course, we have the support areas. Now, we're not likely to see this as a kind of clean drop to the downside. We could be looking for a kind of an initial kind of wave 1, wave 2, then some kind of wave 3, 4 resistance, and then finishing off to complete out a larger A, kind of B, and C structure, like so. So for the most part, yeah, I don't think the pain is over just yet. We should be happy that we've kind of rallied up as expected, but we also need to be quite cautious, you know, because the market likes to kind of do this, kind of pull that rug from beneath your feet, rinse and repeat, as they say. So interestingly enough, everything is still very much on track. This could be a much larger correction, washout, before we actually get into a larger takeoff. So we could be looking at something similar to this kind of pattern here, where we are tapping into kind of the mid 50s before we kind of really kind of take off again. So as it sits, it's an interesting pattern on the hourly chart here. So I think the trading opportunities are going to be to go short. I would be looking at this area here and targeting out that previous support, stop loss higher than the previous swing high, and looking for a 1.5 on the risk reward ratio. I'd be looking for something to this effect right here. Entry roughly around 63.39, stop loss 65.13, take profit 60.78. Of course, this is just a rough idea. Things can change. If you want to join our free Discord server and basically participate in the profit pit area, and that is basically where we actually communicate our actual trades, our entries, our exits, our stop losses, risk reward ratios, percentage of risk. All of that information is communicated in the profit pit. To gain access to that, you just have to join the free Discord and be actively trading on one of the exchanges via the affiliate links that we use, whether that's BitGet, Bluefin, Mexi, BitUnex, Bybit, whatever it is. All the links are in the description below, and of course in the Discord server. If you join those, then you're actively trading. You can see everything that we're doing in real time. Okay, unlike these videos, which are obviously recorded a good 3 hours or so ahead of time, the profit pit is in real time. So do go ahead and check it out. So all the links are in the description down below. Okay, let's go ahead and roll this up into a daily time frame then. On the daily time frame, we were of course talking about this short position, right? It's one that we've kind of been talking about pretty much, I think, from around the 14th of April. We were in profit, we moved back up towards entry, and then we're starting to come back down again. I was very ambitious with this one. I don't think we're going to go all the way down to 50 cents. But of course, this is one that we're going to have to continue to see. We're kind of being hit down by a downward trend at the moment. Our oscillator of the MACD histogram isn't showing us much positivity either. But again, it's not going in either direction. The stochastic RSI was up in the overbought area, is looking for downward shifting momentum. So we are likely to see a bit of a wobble on the daily time frame to the downside, in my opinion, but it might not happen overnight. And of course, here we have the relative strength index also still in bearish territory. You can see here, it hasn't been able to break above the 50 level. It's not being able to get those kind of breakout situations. Not only that, we're also lower than the 50 EMA, 50 SMA, the 200 EMA. They are sat quite high. And so we are unfortunately still in bearish territory when it comes to Cardano ADA on the daily time frame. But of course, that's on this zoomed in view of ADA, right? If we zoom out of this, well, actually, you can see that this is actually a rather bullish pattern, right? And we're in a corrective phase of that bullish pattern. Okay, so we had a great 5-wave move to the upside that completed out a C wave. We have a lot of overlapping candlesticks within this channel that we see going on here. Our cumulative range does sit between 27.25 and 53.95, but of course we've tapped this twice already. There's no guarantees that we come down deeper, although there are a couple of areas that we could actually be looking for the kind of the ultimate kind of rebound. That would be 37.16 to 42.72, and then on the higher side it is 46.01 to 49.008. And These areas, again, they are just areas that are scoped out based on current structures and trends, but no guarantees are ever to be met. Minimum expectations have already been met with this move to the downside. This is very much reminiscent of the previous structures that we had seen. This one down here from 2023, before we got into the distribution, we had the accumulation. The distribution led us into the next accumulation before we had the most recent distribution, and this is the next accumulative area. Okay, it is a rinse repeat pattern. Okay, this isn't bearish. It's not like a bear market kind of thing. This is, in fact, a kind of, at least in my opinion, the kind of structure that's going to take us up higher. But it's going to be much of this: pump, dump, pump, dump, pump, dump, and it's going to repeat itself for months upon months. Okay, we are of course looking for our expectations here towards $3.12 to a slightly higher range of about $4.77, and then on the slightly higher side of that, we are looking for that kind of $5.27 to $12.91. Okay, there's a 1.618 target set up there at $9.25 as well. These are key areas and key milestones for ADA, and the journey is going to be very, very interesting in how it kind of maps out and kind of gets there. It's going to take time. It's not going to happen overnight, and we need to be aware of that. Okay, the ultimate structure here on, or ultimately the structure here on the chart is one of bullishness. It is not one of bearishness. So smart money concepts that I've just turned on here is in a bullish structure. It is not a bearish structure, right? It does like to go down and fill out all those fair value gaps, and you can see there are some fair value gaps down here in the accumulative range, right? But this is a bullish structure. We can't ignore that. We've got a strong low, we've got a weak high. This is an indication that it's not likely to continue, breaking down to the point where we have new lower lows on this daily zoomed out view. Okay, this is very much an overlapping nature of candlesticks whilst tilting down like this with a drop in volume. We all know that this, just from the basic patterns that you hear people talk about, is a bullish flag. It's not anything to kind of be too careful, cautious about and too kind of worried about. From a VPVR perspective, most of the volume is sat down towards kind of 45 cents. Whether that is going to be where the most of the accumulation happens is anyone's guess, but it's an interesting one to kind of keep an eye on. From a Gaussian channel perspective, it is in bearish territory, and ultimately when the Gaussian channel turns red, this is ultimately when you want to be thinking about, dollar cost averaging and building out your positions. Okay, now obviously this is on a daily time frame, and you can see that we've been red since the 7th of February here. Okay, and if we can start to see a bit of an upward turn from here, then I think we're going to start seeing the Gaussian channel turn green, and when the Gaussian channel turns green, we're usually going and reversing into an upward trend. Okay, so it's getting closer to that point. Not there yet, and so we want to keep a close eye on that. Now, from anything else on here that I kind of want to have a look at, I don't think so. Let's roll this up into a weekly time frame so that we can actually take stock of the situation as it is. And what we'll do is we'll also throw in smart money concepts. Smart money concepts again shows us with a weekly chart in a bullish structure, and it hasn't been broken. Not even in the bear market did it break the bullish structure of the weekly time frame. Okay, so this kind of shows you that you have to have a kind of zoomed out longer term perspective rather than one worried about every hourly candlestick, right? Unless you're actively trading, you shouldn't really even be paying attention to a 1 hour, 4 hour time frame, right? And if you're kind of just buying, dollar cost averaging and hodling, stick to the daily and weekly time frames. They give you much better perspectives, right? And here you can see that across the years, this is a very bullish place to be, and why we have some pretty lofty targets when it comes to ADA. Okay, turn off smart money concepts, bring in the VPVR, and you can see that during this entire time, actually it doesn't want to load. There's so much data here, it doesn't really want to kind of load this in, but you can still see that most of that volume is coming in at around 50 cents. Very interesting. I think it's kind of just not working out very well in the weekly time frame, to be honest. Now take a look at the Gaussian channel on the weekly time frame, and it is sat in a green area. Okay, if we take a look at this historically, we have seen this Gaussian channel rally out and then turn green and then basically move up into its bullish market. Now here we have a slightly different structure. We kind of rallied up, but it didn't turn green strongly, and we came back down, turned red briefly before rallying right the way back up. And it's testing these EMAs and of course the Gaussian channel quite intensely right now. So this is a very interesting kind of place to be. I do see this as an opportunity to dollar cost average ahead of that next big run, in my humble opinion. And if we take a look at our kind of relative strength index, we have come down lower than 50. Again, that might worry some people, but I take this into consideration as well, that we have found support on the weekly 200 EMA, and we're currently finding support on the weekly 50 SMA. Resistance currently 50 EMA. Okay, turn off the RSI and bring in the MACD histogram. You can see here that actually this is okay. It's basically had a lower high, a lower low, whilst also having lower lows on the histogram. There's no divergence to be seen there either. Now, from an accumulation distribution point of view, you can see just how much accumulation has happened here and how it is holding up very, very well. If we zoom in on this, you can see where it was at, during December, and where it has become and where it has started to come dip down to as kind of retail investors have succumbed to some selling pressure, but it had peaked out quite nicely in kind of late December. So we're talking December 2023 to December 2024. Great accumulation has happened here. A little bit of a pullback most recently, but still higher than it has been for quite some time. So I guess the key message here is that the stochastic RSI is oversold, looking for upward momentum shifts. We're in a good spot, right? We don't want to kind of get too drowned out by the smaller kind of charts, the hourly, the 4 hourly, the 8 hourly, right? When the bigger macro picture is one of bullishness. Now, of course, it's just my thoughts and opinions. You can let me know yours in the comments down below, or join us in the free Discord server, and we can continue the conversation there. If you found this useful, informative, smash the like button. If you're new, subscribe, and I'll catch you in the next one.